about some numbers now. MTAR Tech is the stock on our radar, reported a mixed set of Q1 numbers. It was high material costs that put margins under pressure both year-on-year and sequentially. The company also expects revenue growth of 45 to 50% in FY24. Srinivas Reddy, the managing director at MTAR Tech, joins us now to talk about that. Mr. Reddy, thanks a lot for joining in. You know, of course, I want to talk about a lot of the good things as well. But today, what really stands out as a bit of a concern is the margin pressure that you're seeing. It's been a sharp downtrend because of higher material costs that you're facing. Can you tell us what is the outlook for the EBITDA margins by the end of FY24, and when do you see the recovery play through?
See, we are not concerned with just Q1 numbers. If you look at our last year as well, I mean, we have given a revenue guidance of 45-50%, which is almost 830 to 860 crores. We have another 700 crores to go over the next 3 quarters. There is a very good product mix in the domestic segment as well, moving from 112 crores for last year to 315 crores this year, where our gross margins are much higher compared to the exports that we are doing. So moving ahead, we will definitely achieve the margins what we have said earlier, that is 28% plus minus 100 basis points. We are on track with that in terms of revenue guidance as well as the margins.
All right, so you're on track with that 45 to 50% revenue growth with 28% margins, 100 basis points either side. Mr. Reddy, you know, if you could give us a sense of the order bookings then. You had earlier guided for 1,200 crore worth order wins in this financial year. How much have you got so far? And defense as a proportion of your order book is how much? How much will it increase to?
So our order book closed at 1,078 crores as of June 30th. We received orders for 50 crores, but we're expecting 1,200 crores of orders coming in over the next 3 quarters, primarily in the second half of the year, mainly from clean energy, nuclear segment, and space and defense as well. Defense is a small portion of our business, as you know that very well. And fortunately, we are getting a defense license over the next 1 week. After about 18 months, it has to be cleared by various departments with a clean sheet. We are receiving that license very shortly. And we'll be working with a lot more defense projects moving forward because of this license which we'll have in there.
Can you just explain, Mr. Reddy, what is the upside potential to your defense order book once you do get this license in?
There are 2 aspects of it. One is our R&D and engineering division is also working on various indigenization of various defense products, which we can directly supply to the Air Force, Indian Air Force, Navy, etc. Also, the fully integrated systems that we can develop over the next 1-2 years. And also, it will enable us to join a lot of multinationals jointly to bid for a lot of direct defense projects to be supplied to the Air Force and Navy, etc.
Okay, so clean energy, both civil nuclear power and fuel cells in clean energy, that's almost about 70-75% of your business. Can you tell us overall how is that space faring? What's the current market share like? What is the kind of growth that you're seeing there?
We are seeing substantial growth in clean energy. For last year, we have done 440 crores. And this year, we're expecting about 590 to 600 crores of revenues coming in from there. And what's the best part of it is that last year, all the other segments put together, we did 112 crores. But this year, we are jumping to 315 crores with a high gross margin. So we're talking about the space sector, nuclear, and also the defense and other products that we have developed over the years. So that will actually take our margins much higher. And also the employee benefit expenses are going to drop from 16 to 12% moving forward.
Right.
And also the overheads are going to drop from 11.5 to 9%. So it's very clear indicator that we are moving in the right direction.
I wanted your thoughts on 2 important sectors. You know, one is sheet metal. You did about 100-120 crores in terms of revenue last year. You said that once products are approved, this could actually double. Wanted to know whether that's on the cards and by when. And secondly, drones. Not much in terms of revenue contribution for you, but with the PLI coming in, you had earlier indicated that this could be a big opportunity for you as well. So both on sheet metal and drones, I wanted your thoughts.
So let me clarify on sheet metal. What we have said is about the products. You know, ASP, we did around 17 crores this quarter. The product division is moving from 23 crores last year to 128 crores this year. And that's a substantial jump, purely based on what products we have developed. And sheet metal, probably this year we'll do about close to 80 crores. Last year, I think we did about first articles and other dispatches close to about 15 to 18 crores. So that's a substantial jump which we're looking at as well there. When it comes to the defense, as I mentioned earlier, once we have the license in, MTAR has...
Drones is what I wanted to know. Mr. Reddy, drones, not defense.
Yeah, in the case of drones as well, we have the kind of infrastructure and the capabilities to work on it. We are already working towards that direction. And once we have that, and probably in 3 to 4 months' time, we'll come out with the updates on that.
Okay, all right, Mr. Reddy, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is MTAR Technologies talking about their Q1 performance. Well, before we just take a break, maybe we can just pull up